And Mark, 2010, do you think that with a more stable environment and more money coming into the market, do you think more sellers, particularly sellers of higher, the higher quality properties that have been holding back and waiting for higher values, are they going to start putting some of their properties on?
I think it depends on the situation. Again, going back to the lender mentality for a given asset. If a loan is coming due and there's close to, I believe, $1 trillion of loans that were done 2 or 3 years ago, either CMBS paper or other forms of financing that are out there that are going to come due between 2012 and 2013, and as that debt grows closer to maturity and starts to expire or near expiration, there's going to be some pressure. Right now, there might be an ability to amend the loan to a certain degree, or the interest rate might be at a below market interest rate. But once that loan is reset, or once a refi is subject to an LTV constraint and put under the microscope a little bit better, I think you're going to see some lenders that are just willing to either pressure the borrower to sell the asset or to put in more capital, and if they don't have it, then possibly to sell. So I think you're going to see more disgorgement of assets down the road in 2010, 2011, in anticipation of a lot of these loans coming due.
All right. Well, Jacob, how about let's make the assumption we're going to have more M&A activity this year. Mm-hmm. Do you think it's going to be more on the assisted living side, more on the skilled nursing side, or even?
The skilled nursing business has, I think it correlates less with the commercial real estate market in general from a macro stance. And we found that given the liquidity that is provided by HUD and the fact that the nursing home business didn't get as over its skis as assisted and independent living did, as far as an overcapitalization in the space, that I would expect things in the nursing home business to remain pretty constant. I think you'll see some uptick in velocity, but I think you saw a big boom and then a real withdrawal from IL and AL product types, which correlated more with the macro market. And I think you will see, I'd say, a larger increase from a velocity standpoint in assisted living. A lot of it depends on Sunrise and SunWest and some of these other stories.
And Mark, what about the CCRC market? Do you think we're going to, I've been hearing for 12 months all the distressed CCRCs, and there's going to be a huge number of them, particularly not-for-profits, coming on the market. Do you think we're going to see that in 2010 and 2011, or is that overblown?
Well, again, it depends on a number of factors. One of the tremendously important underlying factors is home sales, of course, because seniors tend to utilize the equity in their homes, sell their homes, and put the money into an entrance fee if it's an entrance fee model. And with home sales having been stagnant for many months of 2009, although there's been improvement in the last 2 quarters, there was a difficulty in convincing them to put up money that they didn't have. And so I think it will depend on home sales. Now, with the increase in velocity of home sales, I think you'll see a change in that, although I believe that a lot of the home sale activity has been in distressed homes. So the seniors that have 100% equity in their homes might not be so readily willing to sell their home at a 20-30% discount, whatever it takes to get it sold. They might just hold on to their asset and bring in home health care, or the adult children might take care of them until they really see the need to move them into a facility. I do think that CCRCs are faced with some challenges. I think there have been some situations that we've seen where entrance fees have not been repaid, particularly in bankruptcy situations where the entrance fees have been deemed to be unsecured creditors, the life fee holders.
And we all know which deal you're talking about on that one.
So that, and Jake had some personal involvement with his grandparents in that transaction, and we were involved in the transaction side too, so we were very close to that transaction. We've seen it in others though as well, and it's a trust factor. If the seniors community and the adult children caregivers are not feeling comfortable that the money's going to be returned, I think there's going to be a question, and then there might be more questions in the future, more than there have been in the past, as to where are you putting mom and dad's money if you're taking it for an entrance fee, and is it being escrowed, is it being used to pay down debt, is it being used for marketing costs and things that are not going to be there in the future to be returned if you're not able to sell the property, or if it goes into bankruptcy and it has to be converted to a rental community. So that'll be a real concern for people. I do think there'll be plenty of successful CCRCs, and they will be the ones that maintain a good reputation, maintain good occupancy, use good business principles to make sure that money is there so they can continue to fund that out when there's a move out.
Well, I think we are all hoping that we're going to have a robust 2010. So let's hope we do, and good luck this year.
Thank you, Steve.
Steve, we're a fan of the SeniorCare Investor, and we appreciate the opportunity to come on.
Yes, thank you.
All right.
And thank you.
Glad to have you here.
Thank you.
Okay.